Good evening, guys. You can see time is around 5:40. It's been a while. I think it's been 2 weeks since I haven't uploaded any video. So from here on, I would be daily uploading Nifty as well as Bank Nifty trade analysis regularly. It would be a daily trade analysis, guys, and I would be also telling you some references on how you should trade on the next as well. So please keep in touch. And in case if you find this videos helpful, please stick on to my trade analysis, guys. So let's get into the trade analysis in today's Nifty as well as Bank Nifty. So now let's look into Bank Nifty, guys. And today is 15th, 15th of June. So you can see if you consider the previous 3 4 days, guys, if you look into a daily time frame analysis, always look into a higher time frame analysis and then look for lower time frame analysis, guys. So if you look at a higher time frame analysis, you can see an aggressive, huge bullish pressure over here. And after this, the market gapped up and there was profit booking over here. And after this, you can see the market closed bearish, but the sentiment was bullish only. But you can see following 4 days, guys, the market sentiment is clearly bearish, and the following day, the market hugely gapped down and even below the 21 moving average as well. But it shows some positive recovery as the market closed green, or you can consider the market closed blue. So if you consider the low to high of this candle, guys, so if you consider this momentum towards the upside, the low of this candle to the high of this candle, the market came, took support from 50 levels and continued further bullish. So this is what I wanted to explain, showing that there is strong support at these levels. So let's look into a 1 minute time frame and analyze how the market has behaved. So what I would always do, as if you might have followed my videos, guys, I would always mark the mid of the first candle. The green color line over here is the mid of the first candle, guys. And this is the 5 minute zone. So I would consider 1 2 3 4 5 candle zone as this is the 5 minute zone, guys, the zero point 0.5 as well as the zero point 0.6 level. So if you consider the low to high of this candle, so as the candle has closed bearish nowadays, what we need to see here is that the 5 minute zone is a bearish candle. So what we need to see is this 0.61 to 0.5 levels is the 5 minute zone, which I would consider this. So looking at Bank Nifty, guys, you can see clearly since the market sentiment is clearly bearish, guys, what you can consider is that the market will continue further selling only. You can see the market opened flat and showed some kind of bearishness. And clearly the market broke structure towards the downside here, a clear break of structure here with this huge aggressive selling. Even after this kind of huge bullish pressure, you can see further continuation of bearishness, guys, where the market clearly broke the structure towards the downside. Again, you can see this kind of consolidation clearly indicating the market sentiment is bearish only. You can see this kind of pattern over here after this kind of huge bearishness over here. The small dodgy candles over here clearly indicating the market sentiment is being bearish. And the blue color line here is the 200 moving average. The red color line over here is the 21 moving average, and the gray color line is the 9 moving average, guys. So what we would also add on to is the daily VWAP level. So this is the daily VWAP, guys. And you can see here, everything is under confluence over here, guys. For you to take short position, you can see the market rejecting price from higher levels and closing below these levels. And you can see a lot of confluence over here, the 200 moving average, the 9, as well as the 21, as well as the day VWAP level, everything showing confluence. So what you could have done is to enter a short position over here, keeping your stop loss just above this candle itself and targeting it towards the downside. And for target levels, what you could have used is the fib extension levels, the common point you can use, to the common point you can use, to the common point you can use. So what you could have done is to target all the way to 1.6 levels over here. You can see exactly the market came all the way to this fib retracement levels and reached all the way to 1.68 level over here. So this is where exactly you could have targeted us. I hope you're understanding what I'm saying. So you can see here the market came all the way. Again, the market retraced, guys. Didn't reach the 1.68 level, but rejected price from the day gap level and continued all the way. And here the market swept the previous low over here, but failed to close below this level. So you can see a clear sweep over here and showing price rejection. But what we need to see here is that there is a previous demand over here. The last up move, which broke structure towards the downside, you can consider this as a demand zone over here. So the market, in case if the market sentiment would have been bearish, the market would have clearly with aggressive selling, like you can see, rejection of price from the daily VWAP level. And the market would have showed some kind of aggressive momentum, breaking these levels also. But what you can see here is that the market failed to cross this demand zone over here. We can consider this to be a point of interest. for you to take whether long or short trades. In case if the market after rejection of price from these daily gap levels, guys, aggressively might have even broke this and even broke and closed below these levels, we could have considered the market sentiment to be bearish and we would have looked for short setups. But what you can see here is that the market rejected price from these levels and showed some kind of huge aggressive displacement towards the upside. But here, with this momentum towards the upside, the market failed to close above these levels as well. But what you can see here is that here the market clearly showed a market structure shift. The first lower high formed, guys, before it broke structure towards the upside. So if you consider this aggressive momentum towards the upside, and if you try to mark the low of this and the common point between this to all the way to common point between this, what you can see here is that the market rejecting price from 0.38 level over here. You can see a clear rejection of price from the 0.38 level. This is the 0.38 level where price is rejecting, and again the market broke structure towards the upside. Here is another break of structure, guys. So with this break of structure, what you can see here is that the market, the three candles over here, which broke this structure high, left a fair value gap over here, right? So you can see this is the fair value gap where the market had left before it broke structure towards the upside, the three candle structures. So what you can see here is that this is the fair value gap. So after the break of structure, right, the market again came, mitigated this fair value gap and again broke structure towards the downside. So in case if you might have entered long position, this is exactly where you could have entered. The first 0.38 level support where the market came here. Or in case if you might have missed out again on this retracement, guys, is where you could have easily entered, keeping your stop loss just below this candle and targeting it all the way towards the upside. And for Fib extinction levels, what you could do is that in case if you try to plot the Fib extinction levels, guys, the common point between this to the common point between this to the common point between this. So if you try to plot the Fib extinction levels, you could have targeted the 3.6 levels, or you can see you could have targeted the 4.26 level. But in case if you could consider this Fib extinction levels, since the market, the three candles which broke this high and again retraced, showing a very good support over here. So let's draw the Fib extinction over here, the common point between this to the common. Since the swings are of the same colorways, we will consider this swing only. So what you could see here is this is exactly what we could have considered, guys. So if you try to plot the Fib extinction levels on here, you can see the common here, the swing high to swing low, and if you try to plot the Fib extinction levels, so you can see exactly at the 4.26 level is where you could have easily exited your position. This is exactly where you could have taken a long trade, guys, keeping a stop loss just below the candle, and you could have made a decent profit. I hope you're understanding, guys, what I'm saying. You can see after this kind of huge bearish momentum, the market closed below these levels, but the market failed to close below this swing low, guys, here. And showing a strong support over here, the market shows some kind of aggressive buying pressure. Again, the market retraced to mitigate this fair value gap over here. You can see this fair value gap over here was being mitigated. Market failed to close below this fair value gap over here, and the market broke structure towards the upside. Again, retraced to the 0.38 level. Again, broke structure towards the upside. Again, retraced to 250 levels, or you can consider the fair value gap over here. So the market mitigated this fair value gap and continued further bullish rise. And target levels is the Fib extinction levels, the 4.26 levels over here. And you can see how after this the market consolidated. And if you see this aggressive moving momentum towards the upside, guys, you can see if you look into a high time frame analysis, since there is a lot of buying pressure over here, the market is just trading and trading above this 21 moving average throughout the day, guys, with no retracement. Whosoever might have sold his positions over here, all those stop losses might have been hit, guys. And this is one trade opportunity which I have also taken, guys, where you could have easily captured. And this momentum towards the upside is where you could have expected the market to reach all the way towards the upside. And what you can see here is that here again the market broke structure towards the upside. You can see a clear break of structure over here. And what you can see is to plot the last demand zone over here. So the market came over here, mitigated and continued further bullish. So there are a lot of entries. You can see how the market, guys, the market is showing some kind of bullish sentiment, but clearly the market is not following a clear price action. But let's decode this trade, guys, how the market has behaved. So you can see what I expected is that the market would retrace to this premium and discount zones, guys. So if you consider, if you look into a 5-minute time frame and see here, what I was expecting is that after this kind of huge bullish momentum towards the upside, what I expected is that the market would retrace to this optimum trade entry zones since there was a fair value gap over here. You can see there is a fair value gap over here, and there is a fair value gap over here as well. So what I expected is that after this kind of huge bullish momentum, the market might show some kind of negative momentum, mitigate this fair value gap, and continue further bullish. But since there is a lot of buying pressure, the market didn't even retrace guys, and the market aggressively showing some kind of bullish sentiment and continued further bullish without no proper retracement as well. So what you could have considered is that if you consider this momentum, again the market retraced and continued further. So what you could see here is that if you consider this swing momentum over here, right, the common point between this to the swing high over here to the swing low over here, this momentum towards the upside, yes, you can see the market reaching all the way to this optimum trade entry zone. So the market mitigating and showing some sort of demand over here. So either you could have considered this optimum trade entry zone after this kind of huge bullish pressure, the market retracing back to this optimum trade entry zone and showing some sort of demand over here. And this is somewhere where you could have clearly taken trade and keeping a stop loss just below and targeting it towards the upside. Or in case if you try to plot the anchor gap level here, you can see after the market showing some sort of demand over here, the market broke this, again retraced over here. Again, breaking this neckline is where you could have targeted and targeted this buy side liquidity as well. So you can see guys, there is no clear price action as of this after this kind of huge bullish momentum. The market just had to target all those sellers who might have entered and hitting all those stop losses, and there is no retracement only, guys. Even though the market showed a small retracement, but the overall sentiment, the market mode is towards the upside itself. You can see this kind of huge bullish momentum towards the upside, where the market uh, here they didn't even sweep this liquidity. Instead, the market broke towards the upside. And if you consider this huge bullish pressure over here, the low of this candle to the high of this candle, the market retraced to 50 levels. And again, sweeping this buy side liquidity over here, we can see again retracing, reaching 50 levels and sweeping this buy side liquidity. Again, coming to this optimum trade entry zone, again continue further bullish. So it's as of now, there is no entry, guys. As of a common with proper risk to reward ratio, so I can't clearly explain to you this trade analysis from here onwards. But definitely, the morning trade, guys, is what's more important, and I would be more focusing on to trade. I'm not focused to sit and make you sit throughout the day, guys. I just want you to take one or two or three trades, guys. A maximum of three trades. If your first trade stop loss has been hit, definitely go for another trade. And if second stop loss also is hit, definitely I'm asking you to exit and hope for the next trade, guys. Don't trade on that day because the trade would be definitely a revenge trade, and definitely you're gonna lose a bigger amount in case if you take even the third trade as taking stop loss on the first and second. It's purely subjective, guys. It's based upon your opinion only, but this is what I focus on. I would not take more than three trades a day and mainly focus on taking just one trade, guys. In case if I would focus on taking only one trade, that's more than enough for me, guys. And based upon pure risk to reward ratio is what I usually trade. So this is about bank nifty, guys. So I would not tell you a lot of trade opportunities. I just want to focus on just one or two. And you can see after this, guys, even though the market sentiment is clearly bullish, I would have definitely told you. You can see the market taking support with current continue. But this with all these trades are just for scalping, guys. Definitely not a positional trade. So that's what I recommend you to not trade because all these opportunities where you could have traded here are just for scalping purpose. You could have just scalped for a big profit. And now let's come to Nifty 50, guys. In Nifty 50, you can see when compared to Bank Nifty, Nifty 50 showed a very good positive bullish momentum as the market gapped up above the pivot levels. And if you look into Bank Nifty, guys, if you look into Bank Nifty, definitely the market gapped up, but again the market broke towards the downside, even the pivot levels as well. But in Nifty 50, so the market clearly trading above the 200 moving average. You can see as soon as the market gapped open, guys, the market shows some kind of bullish sentiment, rejecting price from this 200 moving average, clearly signifying the market sentiment is bullish. But you can see after this kind of huge bullishness, the market here showing some sort of weaknesses as the market failed to close above this high as well. You can see the market rejected price from these levels. You can see a clear sweep of price, or you can consider this liquidity sweep. And after this sweep, guys, when is this sweep valid is when the market closes below this swing low. You can see a clear chalk formation after the market struck this high, clearly indicating the market sentiment is bearish. And if you consider this huge bearish momentum towards the downside, if you try to plot the high to the common point between this to the common point between since the swing high is the black candle over here, the swing low is the blue candle. So we should consider the common point. You can see the market did trace to this the fair value gap over here, or you can consider the premium discount zone, or you can consider the 50 levels also here. This is the golden zone ratio, guys. The golden zone levels over here, rejecting price from these levels and continuing further selling towards the downside. So in case if you try to plot the fib extinction levels, guys, so if you consider the common point between this to the common point between this to the common point between this. So what you could have targeted is the 1.68 level, which is as same as in banking pay as well. So you could have targeted the 1.68 level clearly towards the downside. And for confluence, you could have used the anchor VWAP level. This is the day VWAP level where price rejecting. You can see a clear rejection of price and price closing below this 21 moving average, as well as rejection of price from this day VWAP level, as well as the 9 moving average, clearly indicating bearishness. And another confluence over this swing high. You can see there is rejection of price from these levels. So a clear short position over here is short position, a clear short position over here, keeping your stop loss just above that candle and targeting it all the way to 1.6 levels over here. This is how you could have targeted. Once the market is moving in your direction, is how to trial your stop losses, and that's how you can take your trades based purely based on risk to reward ratio, and it can be a risk-free trade. Guys, don't risk your trade too much. Once the market has moved to in your favor, always trial your stop losses to break even or with a minor profit. And when the market is has hit your target, just exit your positions. And you can see clearly here, guys, the market showed rejection of price from this 200 moving average. Again, the market showed aggressive selling and towards the same zone over here. Guys. You can see you can consider this to be a point of interest over here where previously the market showed some sort of demand rejection of price from this 200 moving average. Again, the market came to this zone, same zone, where the market shows some kind of aggressive buying pressure. And if you look at around 950, guys, and at the same time, when you look into Bank Nifty as well. So let's look into Bank Nifty. So if you look into Bank Nifty as well, guys, so at around 950, you can see this is at around 950 with three candles over here, guys, which formed the bullish cow candles over here. At the same time, even in Nifty also the market found some kind of bullish candles over here, clearly indicating some sort of support at these levels over here. After this, the market came and mitigated its fair value gaps, the three candles over here. So the market had to mitigate this fair value gap over here. Market failed to close below these levels. So for you to consider a better support, you could have considered the daily wrap level. And you can see this candle over here, guys, which took rejected price from this 200 moving average, broke the anchor wrap level towards the upside, and even the 21 and as well as the 9 as well as 21 moving average, and closed above the 21 moving average. With this candle confluence, guys, is where you could have clearly taken long position, keeping your stop loss just below this candle only. So long position over here, keeping your stop loss just below this candle and targeting it all the way towards the upside. And in case if you try to plot the fib extinction levels of this momentum towards the upside, or you can use the projection block as well. So I would teach the projection block later. So if you consider the fib extinction over here, the common point between this to the common point between this, since the swings are of the same color, let's consider using these swings only here, since the swings are of same color, guys. So this swing over here and this swing over here. So what you could have targeted is all the way to 4.26 level over here. You can see this is the 4.26 level. And for next target, what you could have done is to plot this fib extinction levels and target is 2.6 level over here or the 3.6 level, or you can see you could have considered all the way to 4.26 level. But let's not consider this much also, right? What you could have done is to enter your position here with a minimum risk to reward ratio and targeting it all the way towards the upside. So you could have targeted it all the way to this 4.26 level over here. This is the 4.26 level, which was previously mentioned over here. And you can see as long as the market is trading above the 21 moving average is where you could have traded and exited your trade. And after this, you can see the market just consolidated in the sideways final. But this momentum towards the upside is what's more important, guys. So I would just be focusing mainly on just one or two trades a day and a maximum of three trades, guys. I would not explain each and every trade possible for you, but definitely what I would consider here is that you can see the market here showed some kind of aggressive bullishness over here. The last down candle, which broke structure towards the upside. So you can see a clear breakout structure over here, guys. Another breakout structure. And if you consider the order block level, the large down candle, which broke structure towards the upside, the market came mitigated and showed some kind of bullish momentum. Again, the market retraced to this fair value gaps over here. So you can see this fair value gap over here, mitigated its fair value gap and continued further bullishness. So this is the fair value gap where the market mitigated. So let's mark this fair value gap, and this is a clear 1 minute order block. So the market, you could have either taken your position over here, another trade position over here as well. And you can see even after this kind of strong selling pressure, this momentum towards the upside, where the market failed to close below these levels and showing some kind of aggressive momentum, clearly broke structure towards the upside. And you can see a clear breakout structure, uh, breakout structure over here, clear breakout structure. And after this kind of huge aggressive bullishness, guys, if you consider the pound point between this to the pound point between this, you can see the market retracing back to 50 levels over here and failed to make a lower low. Instead, the market showed some kind of bullish momentum. This is the 50 levels over here, and the market came and retraced to 50 levels. After this, the another bullish engulfing pattern, another bullish engulfing candle, showing this kind of bullish momentum. We could have targeted all the way to this buy side liquidity over here. So this was one buy side liquidity where you could have taken. So this was another trade position, keeping your stop loss just below this candle and targeting this buy side liquidity. And after this kind of huge solid bullish candle, taken with this buy side liquidity as well. So this was one trade opportunity where you could have taken. And after this, though, you can see clearly the market uh, coming and taking support from these levels over here, the last down candle over here. This you can consider another point of interest. This is the last down candle which got structured here. So the market came mitigated and again moved in a sideways manner. So this is very simple to explain, but on real time basis, it's very difficult to trade because you would never know how the market would behave. Since the market might even reject price from these levels and continue all the way to these levels over here. Since there is a big pool of liquidity over here, and if you consider in a 5 minute time frame, I would like to show you. Since there is a big pool of liquidity over here, this is called as a liquidity run. So in case if the market sentiment would have been, if the market has to come and grab this liquidity over here, the market would have definitely show some kind of huge bearish momentum. And you can see there is a lot of fair value gap over here, and the market will come and mitigate these fair value gaps. But since there is a lot of buying pressure, the buyers over here were so strong that they didn't let the price to even to come towards the downside. Definitely, this is an institutional level entry over here. So institutionals might have definitely entered at this levels over here, guys. So definitely keep that in mind, and or you can expect the institutions might have entered on these positions also here also as well. So what I'm expecting is the further the market might show some kind of bullishness. So in case if the market tomorrow guys gaps down, definitely the market would mitigate this optimum trade entry levels over here and showing another bullish momentum. But in case if the market gaps up this, the market will continue further bullish as well. So this is about Nifty as well as Bank Nifty trade analysis. I would from here on be uploading regularly, guys, from Monday to Friday on Bank Nifty as well as Nifty 50 trade analysis. I hope you like it, guys. In case if you find my videos helpful, please like, share, and comment, and share with your friends and family as well, guys. And keep supporting my YouTube channel. Uh, and definitely, I would be explaining new things and new concepts, uh, which would definitely play a crucial role in your trading decisions as well. So, like, share, and comment, guys. Thank you.